Gary Miller from Trusted Financial Advisors, and I wanted to give you a little bit of a mid-quarter update. Today is February 17th, and I've made some portfolio changes, as you may have noticed, that I believe reflect what is going on in the markets. First of all, the overview. It appears pretty darn clear that the U.S. economy is recovering, but the rate of growth of jobs is very sluggish. Nevertheless, there is evidence that consumers are feeling more confident, possibly because of what they call the wealth effect. The stock market has been going up now for almost 2 years, so people feel wealthier, even though their houses haven't been going up in value. But people are returning to retail. Retail sales are trending upward, and the consumer is back to some degree. As I've said in previous newsletters and blogs, I don't believe the consumer in the United States will ever spend at the rate they did prior to the Great Recession of 2008 to 2009. I believe there has been a psychological shift that, at least for another generation, is irreparable, that people will always be more careful. Those of us who had parents or have parents who went through the Great Depression of the 1930s know that that experience shifted the way people in that generation thought about spending. So I don't think we're going to see a boom in consumer spending. People are going to keep their cars longer. People are going to not necessarily feel that they have to get the latest skis or the latest bicycle or the latest clothing just because people are trying to sell it to them. Nevertheless, there is evidence that the consumer is coming back. And for this reason, for a number of you, I have purchased Simon Property, which is a real estate investment trust. And that is the first real estate investment trust I bought since we got out of them. I believe the last one, we pretty well exited that position in 2006 and 2007. They'd been a terrific investment, but I became nervous because they were overloved. And then, of course, the markets in general fell apart. But I'm back into Simon because the stock has made a technical move that tells me that at least the institutions believe there is a sustained momentum in their growth. And they have reported recently an increase in occupancy rate. That's a major thing for a retail company. I really wanted to buy that company a while ago, but they were going through the dance of trying to pick off properties from or take over one of their main competitors called General Growth Properties, who was going into bankruptcy. That didn't work, and frankly, I think it's probably just as well for Simon because they would have taken on a lot of debt. In any case, as an expression of my belief that the economy is improving, particularly in the U.S., I purchased that stock. Now, the other big story that you've seen some changes on is the energy sector. As you know, we purchased BP for those that I felt could be a little more aggressive back, I think it was in November. And I've added for many of you positions in ExxonMobil, symbol is XOM. This is a stock which many of you held a couple of years ago, but I felt was getting ready for a sell-off along with the overall contraction in the economy, and I was right about that. We were able to re-enter in most cases recently at a price below that at which we sold it a couple of years ago. The reason for purchasing Exxon is my belief that the world economy is on the mend, that demand for energy is going to continue to grow, particularly among aspiring nations, China, India, Indonesia, Brazil, Russia, countries like that, where a new middle class is developing, where people who have never had cars are buying cars, or people are moving up to larger cars, etc. Basically, a lot of these countries are going through what we experienced here in the 1920s in terms of automobiles. So the demand for oil looks like it is going to continue to rise, and oil is a difficult commodity to produce. You don't just turn on a switch and produce it. There's a lot of research, a lot of capital has to be invested, and it takes a while for the energy companies to ramp up and produce enough oil to meet demand. What is going to encourage them to ramp up and produce more oil is higher prices, and we are definitely on the way to higher prices, and you've already seen it at the gas pump. So I believe that Exxon and BP are going to be very good holdings for us, and for most people, they're already a profitable position. Anyway, overall, we are having a fairly good year so far. I am noticing a few stocks that I'm getting a little nervous about. I think people are getting too enthusiastic about. But overall, if you, unless there's a major change in the next 10 days, you'll probably be pleased when you look at your February statement. If you have any questions, as usual, feel free to give me a call or shoot me an email and we can talk about your particular portfolio positions. This is Gary Miller signing off and wishing you good health and prosperity, and we will be back with you soon. Thank you.